Is the AI investment strategy really the best investment strategy right now? You've got SpaceX wanting to have an IPO for about 1.75 trillion, while Morningstar is saying that it's only currently evaluated at 780 billion. SPX hitting an AI boom, but actually has come towards a bit of a local high. Although we have some supporting arguments to say that the economy is looking very good with copper versus gold hitting local highs. The US ISM Manufacturer Index also hitting local highs. You may start to think, yeah, maybe the AI investment thesis actually does have a lot of fuel. But Nvidia moved 172%, Micron Tech 256, Marvell Technologies 578%, AMD at 590%. So you really have to ask yourself right now, is it the best decision to be buying into the AI narrative when we are at highs at all time in the market, or is it better to be a little bit more cautious right now and look into other areas of opportunity? All of that we will cover in today's video and a bit of highlights into crypto and what's been going on. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once. Now, into our end of week session. I actually want to start off with SpaceX and its IPO coming on June 12th. This is a massive event for the American global markets because they are wanting to have an evaluation of about 1.75 trillion upon the IPO itself. Look, that's a big number. Even some of the biggest evaluations, such as Saudi Aramco and everything prior, were not at this particular level. And it's basically going to take out Google's initial evaluation when it started and all these other major companies, even Microsoft and Meta. So when you're looking at a company like this coming into play, you really want to evaluate what is this particular company wanting to deliver? And when you have a little bit of a deep dive over here, you see that SpaceX is three distinct businesses. First of all, they've got the space launch and Starship research and development. Then you have their Starlink satellite broadband service that they offer, which I have to say is a fairly cool service. And then you have SpaceX AI as well. Now, what their goal is to basically have an orbital data center. That's particularly their thesis. And what they want to do is basically they want to have these orbital data center satellites, solar powered, and having the cooling of the cold of the space itself to be able to power these particular data centers with unlimited solar energy. And although that sounds particularly great, that is a target of 2028. Now, with delays and with things not delivered yet, sure, a $1.75 trillion evaluation sounds great for them, but will it really hold up right now? Well, Morningstar, an evaluating agency, seems to disagree. And here's why. They're currently saying that it should be evaluated at about a 780 billion mark, analyzing the three aspects that this particular company offers because of recent instances where it actually reported a net loss of about 4.28 billion in its latest quarter and 4.94 billion altogether in 2025. The SpaceX isn't actually a very profitable business right now. Now, sure, 2028 looks really good. And what's really concerning is I'm in Australia. I currently don't even trade in the US stock markets, but I got a notification from ComSec to tell me I should get into this IPO. So there's a lot of heat getting involved in this particular area. And you ask yourself that question, why is that the case? Well, because the AI narrative is actually playing in to the US stock market, especially the SPX or the S&P 500. You look at the SPX over here in the linear chart, we're actually coming towards local highs. And this is a real sign of strength because, yeah, we're touching this high aspect and it looks fairly good. And look, right now, we could be at a bit of a local high and we could cool off over here for a bit. But the moment a company like SpaceX gets attached to the SPX, and it can do that within 15 business days of trading. So all SpaceX needs to do is trade for 15 business days, and basically it can go on the SPX. It's crazy with the recent changes that SEC has made. And once it does that, on the linear graph, this could very easily break above guides and start a bit of an AI boom, which is a little bit concerning and also interesting. So when you look at the SPX on a exponential chart, you can see over here, as I've positioned my line over here, there's a difference between the linear and the exponential chart. And you can change that based off your logarithmic setting over here. But when you look at the exponential chart, you can see we still have a lot more room up to even to the $8,000 level, which is where our next point of resistance is. So don't be surprised if the SPX does decide to go there in the short term. What are some supporting theories for that? Copper versus gold. We told you the last time that if on the monthly it starts putting in a local high, this is a fairly bullish prospect and could be going towards its 200 SMA. And you can see it's strongly doing that, especially with the support that it has from the MACD bullish crossover as well. The US Purchasing Managers Index, also known as the Business Manufacturing Index, has been setting another high at about 54, which means that manufacturing strength in America is growing rapidly. Now, combine that with a couple more news events, such as the US jobs report that came out in May. They added about 172,000 jobs when the expectation was only at 85,000. And the unemployment rate was actually basically in line with about 4.3%. So these news events are actually looking fairly good and could keep pushing the market up. But I want to again stress the question, is AI the best investment thesis right now? Because if you look at it, Nvidia has already made its move from April last year to now at about 172%. So just a little bit more than a 2x. Micron Technology has already made its move from April to last year, 256%. So a little bit more than a 3x. Marvell Technology, 578%, a little bit more than a 6x. And AMD, another 590%, more than a 6x. So all of these AI stocks, these narratives have already moved up so high. And you can see on Friday, the XP session had a little bit of correction. And this is where you need to be careful to think, is this going to be the best investment strategy for you right now, especially in the short term to medium term? Because if we are so hot right now, maybe it's a little bit time to cool off as well. Because there's a lot of things happening right now, and it's probably best to be a little bit cautious when these markets are hitting such strong highs. Because generally, after a local high, corrections can follow. And some of the factors that we've been talking about on this particular channel that contribute to those corrections obviously has been geopolitical events, particularly oil has been playing into that too. And I was surprised as oil was making its move down. I was actually hoping that it touches these SMA lines, these green and yellow lines at the 20 and the 50 SMA, but it didn't. And it actually starts ranging down to the $95 level for Brent crude. And the reason why that is because Middle East de-escalation hopes are rising, basically saying that diplomatic negotiations, including US-Iran discussions, are hoped to be going well. And particularly speaking, Israel and Lebanon have reached a bit of a ceasefire deal. So as that ceasefire happens, discussions between Trump and Iran possibly coming towards a better solution. So this could be good for the short term in the market and could have that narrative to push the markets up. Now, personally speaking, I would like to have hope someday that from this AI narrative, that we have a little bit of rotation into cryptocurrencies as well. But that's just a bit of a hope. When we actually look at the facts over here, Bitcoin is currently heavily bearish. Now, we discussed with you in the last video, this is a multi-month trend line, this red line over here. This has supported the market for just about 8 years or so. Okay. Recently, if you have a look, we have broken below this trend line. Okay. And that is a fairly bearish signal. We have also broken down of these particular recent local lows as well. Some of the interesting aspects though is on the price we are making lower highs, but the RSI is making a higher high, which is a bullish divergence. But that hasn't been confirmed yet because this weekly candle hasn't closed. But another interesting factor, like we said in our last video, we are testing the 200-week SMA. So right now, this could be a point of testing before the market decides where it's good. We did go down all the way to 59K, which was fairly stressful for the markets and tense. But for now, we do hold this particular support line. So we'll see how that plays out to end the particular week. Bitcoin on the daily as well, I just have to say, is horrible. Okay, we have obviously on this ascending wedge just played out perfectly. I'm not particularly much of a bear, so I don't take many shorts, but this particular pattern just played out beautifully. Same with this bearish flag. we went down. And look, when you look through the crypto sentiment, a lot of people are saying based on this Fibonacci, we can go all the way down to 57K. And in about 2024, this particular region did test local lows of about 55,000. So we could touch that area if the rotation from crypto to AI continues to occur. Because if you guys don't know that there is a relative narrative that supports that, because Bitcoin has been having outflows in its ET for nearly 14 days in a row. And very recently, we just had an inflow of just 3.2 million. But for the last couple of weeks, it's just been outflows on Bitcoin. If you look at this particular chart, since October 2025, when we hit highs of our inflows, we've just been going down. That is the state of the crypto markets where a lot of people right now are playing the AI trade. I'm here to question, is the AI trade right now still the best investment thesis considering they're such local highs? Ethereum, also similar story, very bearish. In fact, we have broken down of this particular 5-year trend pattern downwards. Now, this could be a bit of a fake out. We need for it to confirm on the weekly, and a bit more of the supporting pieces could be on the monthly as well, just to have a review for. Even though if on the weekly we have a breakdown, but we can come back by next week, that would be great. But right now, it's fairly bearish. So we need a couple more weeks worth of data just to make sure that this is a confirmed breakdown before, if we do decide to go lower. But for now, it's just not looking great over here. And on the RSI, if you have a look on the daily RSI, we hit a rating of about 12.33, and we have never hit that rating on the daily, which could go to say, and similar story for Solana, we hit a rating of about 15, which we've never hit on a daily before. We are possibly at the worst time in crypto, especially from a short-term perspective. Could there be a relief rally from here onwards? At least a small one that just gives a bit of peace to the crypto investment market. It's plausible, because when we have a look at funding rates for margin trading, right now, everyone's a little bit negative, which means a lot of people are just shorting the markets because they believe that's the general direction. But if market makers, they generally take the contrarian bet to take most of the liquidity, a little bit of a move back up to the upside to just garner those previous support levels and still keep some structure to the market might not be a bad idea and give us that particular relief rally. But that really has to be seen. But another interesting indicator that shows us some relevance is the altcoin strength against Bitcoin. And even though very recently we lost a little bit of strength on altcoins against Bitcoin, we've just come back to test this particular 200-day SMA over here before a possible move upwards. So what that has to say for altcoins and whatnot is still very interesting, considering some of these more riskier plays are showing a little bit more strength to Bitcoin. So a lot of interesting things are going on in the market. And before you decide to continue on the AI narrative versus what some of the other asset classes, such as crypto or even something like oil, which is going down as well as happening, have a holistic view and see the narratives that you want to work towards and where the most amount of opportunity is for you. But that's my analysis for today. I will pass it on to Steve for a little bit more technical.
And before we move on, I'd like you to bring back up a couple of those charts as well too, in terms of Ethereum and Solana in particular, because as you were looking at that, have a look at the MACD just down below, because interestingly, with the most recent decline in Ethereum, we know it's been fairly bad in terms of the price action, but you would normally be expecting that the MACD would have also made new lows. It hasn't. So that's an interesting divergence that we're actually noticing there. The same with Solana, the same situation there with that too. So these kind of divergences are always very, very fascinating to note. And that could also be indicating some potential strength of movement that it hasn't come down as far as what you would have expected in terms of the MACD. Something to observe because of the mere fact that we are now seeing stabilization over the last, 24 hours in particular, in terms of Ethereum and Solana, and even Bitcoin to an extent there as well. So these kind of things, when you do notice those kind of aspects, could also be indicating as well potential testing of support areas from a long, long time ago. And I'll go into that as well with my analysis coming up shortly in terms of those potential support areas in relation to Bitcoin and Ethereum.
No problem. Thank you for that, Steve.
So, thank you once again there, Yash. Fantastic presentation as always. Now let's go into the technology sector, which is one of the biggest catalysts in relation to Friday's sell-offs that happened in the markets with the equities. A fairly large drop in terms of technology sector overall, and you can really see exactly how much it actually fell. A very ominous number you can see in terms of the percentage drop, 6.66%. I'll leave it to you guys in terms of thinking about that number. Very ominous in terms of those who are very superstitious. But you can see exactly what's happened overall with the candle, particularly a major problem in terms of breaking the short-term moving averages in relation to 8-day moving average and the 15-day moving average, being those yellow and cyan lines respectively. On top of that, let's take a look over the left-hand side in terms of the chart over here. You can see it's also breached in terms of the lower high and lower low on the lagging indicator as well. So we're really starting to actually have some warning signals in relation to technology sector. But is it all doom and gloom? Well, not quite yet. We haven't actually breached the baseline in terms of the Ichimoku curve. So not terribly too bad directly as yet. May have taken out some support levels, being, say, one of these support levels over here in terms of 186 on the XLK, but it's not entirely too bad because look at all the big massive run-up we've actually had with XLK. So really not the nail that really drives everything home and basically says that's it, it's over for tech. But one thing's for sure, and like we've been saying over the last number of videos here on this channel, if you've had everything in the technology sector, that's not a very good investment strategy overall. You've really got to be able to basically say, have a little bit in tech for sure, but really keep those stops tight just in case a day like this occurs. And you've really got to basically then say, all right, well, now we've got to really take a look and reassess exactly what we're doing in terms of our risk strategies. But XLK has been one of the big drivers in relation to the overall market. And we can really see that this could actually now be one of the drivers of perhaps a little bit more of a correction. So really, this sell-off on Friday, which affected a pretty much broad sector of the market, has really made us all stand up and take notice that this market isn't really 100% invincible after all. But if we take a look as to what happened in the broad scheme of the markets, let's take a look now at the entire thing with the SPY. You can see that that actually has had a bit of an effect in terms of the short-term moving averages closing beneath those. But is it all doom and gloom there as well? We haven't closed beneath the baseline there either, but we're still getting beneath some of those other highs and lows that were actually there previously as well with a lagging indicator. So a bit of caution definitely needs to be taken into account. But we're still well above the cloud overall and all of those kind of aspects there when it comes to Ichimoku curves, and we're still well above VWAPs and everything along those lines with other moving averages and everything else. So we've had such a good buffer being built into it all in relation to all of those. So the SPY, the Qs, all of those kind of things, they're pretty good. But caution is definitely needed. So Russell, similar kind of situation there as well. Probably a little bit more caution in terms of that because you can really see a lot more of those highs and lows being taken out there. Bigger pillar of strength, though, was actually one that was weaker previously, but it actually developed a lot more strength in recent times, being the Dow. And the Dow overall appears to be where a lot more of the sector rotation has been coming into in recent times. You can really take a look here with the short-term moving averages. They haven't been taken out to the same extent that the other major indices were taken out. So a lot more strength is actually showing in terms of the Dow being the top 30 stocks in the US market. So this is tending to suggest to me that a lot more investors, being especially the institutions, are perhaps rolling more into those well-established companies rather than looking at, say, the AI stocks or a bit more of the riskier, smaller cap stocks in the Russell. So perhaps consider some of those in relation to any potential investments overall. Obviously not financial advice, but this could be where the institutions are getting more involved in all of these movements. But there is a caveat behind all of this, and the major caveat is now the volatility aspect, and something that we actually discussed earlier in the week and also over the last couple of videos in particular, the slightly starting to creep up aspect of the volatility. And we were talking about that in particular on Wednesday in terms of small amounts of creep going along in the upward direction of the volatility. And it was basically mentioning there to keep an eye on this as to whether or not this was about to increase. It did, and it really did, but it really started to increase in the last couple of hours of Friday's trade. And that's when it really started rising and rose above that 20 threshold. What does that mean? Well, in particular, that's when the institutions decide to take their foot off the pedal in relation to actually buying assets on the market. That takes a lot of the pressure off actually the gas pedal, so to speak, in terms of actually buying assets and putting a bit of a protective aspect, I suppose, in terms of asset buying power on the market. And then essentially, there's no gas there to basically keep propelling things in the upward direction. So keep those kind of things in mind in relation to where things are going. If there's no gas going on in terms of pushing things upwards, what happens with the rest of the market? Could we be seeing more and more selling pressure coming along over the next few weeks, for instance? May not happen immediately. We may have a bounce back, for instance, at the beginning of next week in the US markets, as everything might be feeling as though everything's a bit more jubilant again, for instance, or we might have things just continuing to go in a downward direction. This could be particularly of interest, especially in terms of the US dollar, which, as we were also talking about earlier in the week, has started to be inching upwards and upwards and upwards again, especially in relation to this support and resistance area that had developed back in December of last year. And we've really been testing this in recent times, and it's really starting to break out above that. So a bit more strength in the US dollar tends to suggest that people are starting to get a little bit more nervous when it comes to the markets overall. Another area to really focus upon. On top of that as well, we're also starting to see a little bit more weakness creeping into the bonds area. And this in particular is something to really, really focus upon because of the fact that we had such a strong jobs report on Friday. And everyone might be thinking, well, hang on, if we've got such a good jobs report, doesn't that mean that the US economy is going well? That's the exact issue. The economy is going really, really well. So lots of jobs, people are earning a lot more. What do when they earn more? They spend more. What's that do? It's inflationary. People spend more, inflation aspects come along more, and then essentially, what do they need to do in order to curb inflation? Generally, it tends to actually spark up potential interest rate rises. The bonds go down, interest rates potentially go up. And that's what you're basically seeing here with the Treasury note yields in terms of the 10-year yields. Interest rates potentially going back upwards again. And then that puts pressure on the markets, the Russell, all of those kind of aspects there. Borrowing power goes down in the businesses, and then all of the other issues follow through. And these are the kind of things that are popping through there. So even though Trump was basically saying, well, hang on, jobs are actually increasing, everything's going all fantastic there, then that basically should be propelling the markets going upwards, isn't it? Well, actually, you take a look at what happens when jobs reports are really, really strong. In general, markets go down. That's the initial market reaction. And that's what you need to look at when it comes to actual major reports that come out. It doesn't matter what everyone thinks, it's how the markets react. That's the most important aspect to look at. Same with earnings. When earnings come out, don't worry about whether the market earnings are good or anything along those lines there. It's how the markets react that's the most important aspect. Okay, so we've covered the markets overall. That's fantastic. How about the metals? Especially towards the end of the week, atrocious, okay? Overall, they've fallen in line with exactly how we were talking about things during the middle of the week as well. We were suggesting that basically they're going to come back down and test the 200-day moving average in terms of the gold market and testing their support areas there. Look at exactly what it did on Friday. Come exactly right back down to where that area was overall there, testing that 200-day support or 200-day moving average and testing those support levels there. It's exactly where it is right now. Let's have a look at silver. Well, silver, we were basically saying it's going to basically come down more than likely to test that 150-day moving average. It did, crumbled right through it, and now coming back down to test down that 200-day moving average as well there too. Now, there's also a lot of theories that essentially when the commodities start failing as well, they can actually then also reflect into a failure in the markets as well. Really, really observe as to exactly what's going on in relation to these metals. The metals continue to fall, then chances are the markets themselves may continue to even crumble even further as well too. So if these 200-day moving averages tend to actually fail as well in relation to gold and silver especially, and perhaps even into all of the other metals as well, observe them too, keep an eye especially in relation to the markets as well as to whether or not they're going to actually potentially roll over even further. I'll leave you to ponder on that. So that's the situation in terms of the markets and in relation to the precious metals as well. We did discuss uranium during the week as well. Now, we're thinking as though that may actually be gathering some support in terms of getting above the VWAPs. That has turned around completely. Now, whether or not that's going to actually be an indication as to something that's going on in relation to the war, I'll leave that up to you to have raised some conjecture on that one. That could be potentially the situation that's going on. I'm unsure at this point in time, but either way, it looks as though all bets are off. The positive bullish sentiment in relation to uranium, that is now completely off the table, and we are looking as though everyone is basically selling this off at a rapid rate. It is going downhill fast. So really, really observe that could be an indication as to what's going on in terms of some very, very poor aspects in terms of the war. Whilst we're talking about uranium, let's also have a look at Brent crude. Now, Brent crude, we were thinking as though there was still some inconsistencies between Brent crude and USO. Now, with Brent crude overall, it looked as though during the week we were about to actually get back potentially above this 4-hour support resistance line and get back in towards range-bound territory. That has actually now looking as though it's starting to fail, and now we're looking towards getting into a bearish aspect again in relation to Brent crude. It looks as though we're actually now settling beneath the yearly VWAP, being this green line, and now potentially about to go back down towards testing this 100-day support, 100-day moving average, I should say, potentially this support level from back on the 10th of March. Let's see how this does go, because if we take a look over the USO chart, we are still above the quarterly VWAP, being this purple line here. So we're still in a bit of no man's land here at this point in time in terms of the strength in USO. Whether this will change or not, could be anything in terms of the geopolitical circumstances over in the Middle East in general. Do recall that Yash was talking about some of those aspects going on over in Lebanon. Israel is still actually bombing Lebanon, even though the ceasefire is intact at this point in time. Who really knows exactly what's going on over there at this stage? So anything could be potentially going on in terms of oil at this moment. So really a matter of watch this space. Okay, so that covers all of those aspects. Now, we'll get on to Yash's favorite. We'll go on to Bitcoin. Things get extremely interesting in relation to cryptocurrency. We were just talking before in terms of those MACD potential divergences that were going on there. Now, this is where things get extremely fascinating because there is a support resistance line back from March of 2021. Whether or not this is actually starting to potentially form a support level around this area here, being 61,181. This could be our new magic number, Yash. This one here might be, because we're actually potentially testing this at this moment right now. Observe. In relation to Ethereum, could we be testing a new magic number here from April 2025? This one might be 1472. Don't know, but it's a matter of waiting and seeing. Now, I'm not expecting a major dramatic push upwards from either of these levels at this point in time. The reason why I'm saying that is because we are just so far below these short-term moving averages at this point in time, and so far below another support resistance line from back up here for both Bitcoin and Ethereum. I'll flip back to Bitcoin for a tick and you can see we've got loads of other support resistance lines above, and we've got both those short-term moving averages, and they're so steeply declining, right? So we've got to tackle all of those, and we've got to tackle all of these support resistance lines above as well. And we've got all of these other areas here. I still personally wouldn't be touching cryptocurrencies with a 10-foot barge pole. That's me personally. It's got to get well above all of these other areas up here before you can really do anything there. It's a trading vehicle. It's not an investment vehicle at this stage. That's my own personal opinion. Once again, obviously not investment advice. But you've really got to be basically saying to yourself, it's got to get above certain support resistance lines, and then on top of that, you want to be trading or investing along an increasing investment vehicle, and then you can basically place your stop underneath it, and then you can basically say, okay, well, if it goes beneath that area there, all bets are off and I'm out of here. That's essentially the best way of looking at all of these kind of things there, and it's a matter of timing more than anything else. But the interesting observations are essentially the fact that we could be potentially having bounces off these certain areas there, and you've got MACD divergences, which could potentially give you a thesis. But you have got massive downtrends to work against, and they are not the kind of things you really want to be working for if you're working on terms of a long-term investment strategy. Very, very difficult type of stuff to be able to go for. So as always, lots of dynamics at play, without a shadow of a doubt. But Once again, always a matter of taking a look at levels and being able to basically say, can you do something with these kind of strategies overall and be able to work with them? But there are lots of levels to work with, lots of things to basically deal with, and lots of ways of being able to actually play strategies if you wanted to and be able to take a look at your own positions and be able to say, okay, can I stick with my plan? Can I work with my plan? And can I actually modify my plan if I need to be able to actually adjust in terms of being able to still work within the confines of my positions? With that, mate, I'm going to play it right back to you and you can basically work on those concluding remarks for us, mate.
Thank you for that, Steve. Here's where I'm at. The AI narrative seems to be fairly overheated, and it's not a place that I'm positioning myself right now. If we are at a local high, it would be great to see a little bit of a cool off before moving forwards with that particular trade. The crypto narrative is extremely oversold. If it finds any support over here, and there's any hope of a rotation coming from, let's say, the AI narrative to crypto, and legislation for the Crypto Clarity Act also progressing ahead, that will be a key area of opportunity. With geopolitical events as well, such as what's happening with America, Iran, if that's progressing towards better nations too, and what that might do for oil as well, keep an eye out for that opportunity too. But all on that, we just want to present you with what's been happening recently. Thank you so much for joining in today. If you've liked what we have done today, please drop us a like. It really goes a long way towards encouraging us to keep creating these contents. If there's anything we could do better or something that you enjoyed particularly, drop us a comment. That would be great. Thank you. And as always, if you're enjoying the journey, we would love it if you could give us a subscribe and come along with the journey with us.
Share that to Mark as well, because obviously his support is fantastic. Thanks a lot again.
Yes, thank you so much, Mark. And for today's word, let's put in SpaceX IPO. If you guys are following along, please put that in the comments. I would love to see who is joining with that, and we'll respond to any and every comment and give you a shout out next week.
You betcha.